Yeah.
We did lose some ground here after Chicago PMI disappointed, back to 46.21. Let's get to Bob Pisani. Morning, Bob.
Morning, guys. The market's doing what it always does with COVID uncertainty, and that is saying, well, we don't know what's going on, but either way, tech will win. You can see that today in the sectors. Just take a look. Tech down slightly, but holding up much better than the overall market. The only stocks up in the Dow, Apple, IBM, Intel, for example. Consumer discretionary holding up reasonably well. But look, industrials, financials, energy, you see the story here with the cyclicals notably weaker and the growth stocks doing better. So the mantra is very simple. Either way, tech wins. That worked during the COVID concerns, and it's working so far today. And it's growth over value, and it's large cap over small cap. Small cap value have been really hurt in the last 4 or 5 days. But if you can just take a look at the markets since like Wednesday or so, you can just see what the market's doing here. It's exactly what's going on here. So tech is up actually about 1%. Since last Wednesday. Industrials down about 4%. Energy's down about 4%. And banks are down about 6%. So there you go. You have your growth over your value. You have cyclical stocks underperforming growth names. This is the standard knee-jerk reaction. We don't know what's going on with COVID or its variants. Let's do that. Who knows how long it'll work. I just want to point out Europe has been struggling with an old-fashioned Delta outbreak for weeks now, and their markets have been under pressure prior to Omicron. So right now, the Eurostoxx 600, this is just the last 2 weeks. This is the S&P 500 for Europe is down 7%. Spain's down 7%. Germany, France, again, they've really been struggling with Delta outbreaks over there. So they've got problems even before Omicron came out. Asia's been hit very, very hard recently. I mean, Asia has had a very tough year in general. But Hong Kong, the Hang Seng, that's a new 52-week low right now. Korea also has closed at a 52-week low. And this did not happen with Omicron. This has been a problem all year with supply chain issues. The EEM, that's the emerging market ETF, that's sitting right near a 52-week low. Japan, that's not a 52-week low, but the Nikkei's gone nowhere. The Nikkei is flat for the entire year. With the S&P up 25%, the Nikkei is flat. We're waiting for Powell, but we have his testimony, and of course, he's hit the market concern that's out there right now, which is our supply chain issues going to continue now with all this issues with the Omicron. He said, greater concern with the virus could reduce people's willingness to work in person, which would slow progress in the labor market and intensify supply chain disruptions. And that's what the market's worried about. A second wave of supply chain issues, not of Delta, of supply chain issues that may emerge here. So remember, in the first wave, the supply chain problems resulted in higher material and labor costs, but they were passed on to the consumer. So the profit margins of 12 to 13%, 13% is a record for the S&P, essentially were maintained in the third quarter. Now, the concern is if we have these higher costs for much longer, we may not be able to pass on those higher costs ad infinitum, and that's going to eat into the profit margins. Carl, that's the main issue right now. We don't have an answer to any of this, and that's why you see those knee-jerk reactions we were talking about.